Hey guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today, guys, I want to talk about buying a rental property and whether you should come up with a little as money down or put more money down to increase the cash flow. So this is an age-old question. I don't know if there's a right answer. I will tell you what I think. Whether that's right, wrong, and different, that'll be up to your decision and what your goals are. But I'm gonna lay out exactly what it is, or look at two different scenarios here on one property. So we're buying this property. I'm gonna go low down payment, higher down payment, and then we'll talk through, what might be better for certain situations and what option might be better for others. Before we get into that, if you guys don't mind, like, subscribe, share this if you find it valuable. I don't want any pity shares. But if you do like it and do get value from this, please just like, subscribe. It helps us out. Okay, let's get into this. So, all my chicken scratches here. So buying a rental, these are going to be the kind of the parameters. So we're going to say, and I'm going to tailor this to the Houston market. So if you're in another market, $200,000 purchase price might seem insane to you, but I'm just going to go for Houston. So we do a $200,000 purchase price, $1,800 a month in rent, so it doesn't quite meet the 1% rule. And I'm just going to do on average, and this, again, these are rough estimates. I'm just using some basics here, $700 a month in expenses. So, you know what, y'all? Bear with me. I'm going to shut this fan off. There you go. I might get a little sweaty, but hey, it's a little loud, so shut that bad boy down. $700 in expenses. Now, those are our guidelines that we're using. Again, in your market, you might think this is asinine, but in our market, it's not too far off. It might not be super close. It's not too far off. It might not be exact, but it's going to be close. So, how much of the down payment do we have? On this side, we have a $40,000 down payment. That's standard 20%. On this side, we have a $100,000 down payment. So that would give you about $1,000 a month on this side in a payment. That's just principal and interest, and we're using just 7%. So the timer is recording, interest rates are between 6 and 8%. I just split the difference at 7. Again, this will work. These parameters, this should shake out very similarly depending upon your market. You can run numbers for your own market if you want to, or in Houston, if you're $250,000 purchase price and a 7.5% rate, this should all be fairly similar. So if you put 100 down, it's only 665. And again, I'm assuming a 30-year mortgage. Appreciation is going to be the same on either side. You're still going to we're just going to average at 3%, which will be $6,000 a year. Your cash flow is going to be $36 a month over here and $435 a month over here. And I did that by just subtracting $800 by your mortgage payment by your $700. And then your ROI, so you have your difference in your cash flow, your ROI. It's 16% over here. It's 11.2% over here. So all I did was add the annual appreciation, take the annual cash flow, so multiply this by 12, and then divide that by your down payment. That's how you're gonna get that math to work out. So 11 and 16. Now, this is it. So look, when you guys say, how much more money do I want to put down? I want a little bit more cash flow. So this is virtually no cash flow. You're one, maintenance request or one thing away from zero cash flow. But you have a higher return on your investment because you only put $40,000 down. So anything that you get from this will be higher, right? Your denominator, the number on the bottom is smaller. Whereas your 100,000, you hope you're making at least several $1,000s a year because you put $100,000 down. We're neglecting closing costs and some other things in this, but just for the raw numbers in this example, bear with me on that. Now, what should you do as an investor? Should you put more money down and get a lower return, or put more money down, lower return, or lower money down and a higher return? This would be my response to you on that. If you're an investor and you are in some sort of good high-paying job and you're looking to pick up rental properties, several of them, over the course of many years and hold long-term, This doesn't matter. I would put little money down and get a higher return. And why might you say that, Cameron? Because your dollar is going to go further. Over time, your return, if you continue to do 16% returns instead of 11, over time that'll be a lot more money, right? Compound growth, do any calculator you want to, but if you can continually get 16% over 11%, that will expand your portfolio substantially over the years. Now, is that saying this side is wrong? No, because how many gurus out there tell you, go put as little money down as you can, you'll have an infinite return. Yes, but if you do not have your proper cash flows managed, and I mean your personal cash flow statement managed, one AC unit might set you back 2 or 3 years of cash flow, or 5 years of cash flow. Might be gone like that. $6,500 AC unit, gone. It takes a hell of a long time to pay for a $6,500 AC unit at $36 a month. So if you can bear that, if you have a good financial foundation, you have the money, go this route. I shouldn't tell you to do that, but that's the route I went. I put as little money down, but I had a good paying job when I was buying rental properties aggressively. I was buying a house every 6 weeks, and I was doing the BRRRR strategy. I was getting as little money down as possible. I don't remember up here or here, wherever it is, that the video to the BRRRR video, but I was getting higher returns, so my dollar was going further. So I had less money down, and I was able to buy more properties. So that was my strategy on this one. However, if I didn't have the strong financial position and I needed the cash flow, I would go here. I didn't need the cash flow. I had the reserves. And here you can also this is also a solid option like more recently. So interest rates are high. It's killing cash flow on a lot of properties. But if you wait, instead of trying to acquire more and more properties that are break even or negative cash flow and live off of that, why not wait and get more money down and make a solid down payment? Yeah, it's only 11%, but that's still solid. That's a double-digit return. And that's not including tax benefits. Now there's some other things in there I didn't include, but that's generally it's going to be about that. 10 to 15% is a pretty good solid return, especially when you're putting that kind of money down. So if you want to live off of cash flow and you're not looking to grow your portfolio aggressively, go over here. If you're looking to grow more aggressively and you're not trying to live off the cash flow, then this option might be better for you. You can put money in there and you're not worried about it. If you got a cash call, you're okay. If you're worried about cash flow, go over here. So that would be my response to the age-old question of, should we put more money down or should we put less money down? It really depends on your situation. I hope that was a good explanation. If y'all picked up on that or that made sense, let me know. If it didn't, let me know. But I think you're gonna find this is very similar. You're gonna have solid, high teen, low teen, or mid-teen returns if you put little money down. And we didn't even get into the return if you do like a 5% or a 10% down. I was just thinking strictly investment, minimum 20%, and then some, number more absorbent than that. And guys, it's okay to do this. It's okay to wait. You don't have to swing at every pitch. Let the balls go by till you find your right pitch and then knock it out of the park. And oh man, you only made 11%, but again, this is assuming a 3% appreciation. What happens if you buy in a solid market and it's a 5% appreciation? What happens if rents continue to rise? You got a 30-year fixed mortgage, rents continue to go up. So you got to think about all that stuff. But if you're planning to live off the cash flow, please, you got to be careful on the BRRRRs. You got to be careful on the low money down strategies, especially in the environment we're in where we're seeing rents compress a little bit. Okay. Hope that was helpful, y'all. If it was, let me know. If it wasn't, let me know. And I appreciate y'all tuning in. I'll see you next week.